What's happening with the real estate sector in Australia is something that economists are trying to wrap their heads around. The market, once characterized by an unprecedented boom, appears to be at a crossroads. While the memory of skyrocketing prices and heated bidding wars remains fresh, murmurs of a potential slowdown are gaining momentum. Rising interest rates pose a significant challenge to affordability, yet the supply of available properties remains constrained, and cashed-up buyers continue to express interest. This confluence of factors begs the question: is the market poised for a dramatic correction, a gentle deceleration, or a more nuanced shift altogether? In this video, we'll dive into the uncertain Australian housing market. So, let's start. Aussies have always enjoyed chatting about houses, from the value of our homes to makeovers and investments. But the talk about housing has shifted lately. Now the conversation often revolves around a crisis, like how difficult it is to afford a home, whether you're buying or renting. Even those fortunate enough to own a home worry about how their kids or loved ones will ever manage to get into the property market. In the past, if someone couldn't afford housing, Australians might have thought of them as poor or disadvantaged, even if they didn't say it out loud. But now, they're faced with the harsh reality that housing is way too expensive for too many people, including those many consider essential workers. Housing unaffordability is not just a problem for individuals who are poor or disadvantaged. It's become a widespread issue, a housing problem that affects all Australians. Australians have always been intrigued by property, viewing the family home as a symbol of wealth and safety. This is reflected in the consistently high levels of home ownership, which have remained above 50% since the post-World War II era. According to PropTrack, housing prices in Australia experienced a significant surge in 1950, doubling within a single year. This coincided with the removal of World War II price controls on land and rents. Before this change, land in capital cities had been relatively inexpensive, keeping a lid on housing prices. Now, as land near city centers became scarcer and immigration into Australia increased, prices steadily rose through the 1950s, 1960s, and 1970s. Despite improvements in personal and public transport that opened up distant suburban areas, price increases averaged a relatively modest 3 to 4% during these decades, which also saw periodic recessionary conditions. Based on data for the Australian Bureau of Statistics, house prices in Sydney averaged around $27,500 in 1970, equivalent to about $250,000 in today's currency. In comparison, the current median house price in Sydney is $1.1 million. The 1980s saw the deregulation of the financial sector, bringing increased competition. Coupled with a shift to a low inflation, low interest rate environment in the early 1990s, this significantly expanded household access to finance in Australia. As demand surged, housing prices boomed in the late 1980s and later in the 1990s. In contrast to the previous decades, Australia's real estate market witnessed remarkable growth around the beginning of the 21st century, driven by escalating prices in major capital cities like Sydney, Melbourne, and Brisbane. Housing prices are believed to have surged by an average of 6.2% between 1996 and 2010, followed by another 5.2% increase between 2012 and 2017, and then experiencing a post-COVID surge in the last 3 years. This period has coincided with several extraordinary events, such as the global financial crisis, the mining boom, increased immigration, and the COVID-19 pandemic. The primary contributor to the surging property prices has been migration. Australia's population has swelled by over 30% in the last 2 decades, reaching the current figure of 26 million. A significant factor in this growth is the notably high net immigration rate since the mid-2000s, intensifying the demand for new homes. According to Tom Devitt, a senior economist at the Housing Industry Association, the accelerated population growth since the early 2000s hasn't been met with a corresponding increase in home construction, particularly for apartments and units. The building rate has remained essentially constant over the past 30 or 40 years. Moreover, a shortage of suitable residential land has played a crucial role in driving prices upwards. Planning laws, deemed unsuitable, have impeded the necessary changes to expedite the release of ready-to-build land or enhance housing densities in existing suburbs. Additionally, various supply constraints, such as a global shortage of building materials, have escalated the cost of constructing new houses. Labor shortages, particularly over the last 3 years due to travel restrictions, have further exacerbated the problem. Now, if you like what you see so far, please consider subscribing to the channel for more updates. Falling interest rates have also played a part in the property market boom. Interest rates, impacting all asset prices, including housing, have been on a downward trend since the financial deregulation of the 1980s. This trend, excluding recent rate hikes, has led to significantly higher credit availability, stimulating demand. In 2000, mortgage interest rates averaged 8%, but during the pandemic, they dropped to 2%. According to PropTrack economist Angus Moore, this prolonged trend of decreasing interest rates has made housing affordability relatively easier, despite higher home prices relative to incomes in recent decades. Australia's property market consistently ranks among the world's most expensive, with Sydney and Melbourne regularly appearing on the list of least affordable housing markets, alongside cities in the US, Asia, and Canada. One way to measure affordability is the household debt-to-income ratio. Australia faces one of the highest debt levels globally, with a household debt-to-income ratio of 211%, more than double the US's 101%, and significantly surpassing the UK's 148% and Japan's 115%. However, economists advise caution in making simple comparisons due to variations in government and institutional ownership of housing markets and differing interest rates across countries. However, every adversity brings about opportunity. Solving the housing crisis boils down to increasing supply. To make housing more affordable, we need to build more in desirable locations. Arguably, we haven't been doing enough of that, contributing to the high cost of housing in some parts of Australia, notes PropTrack's Moore. The federal government aims to tackle the issue through the Housing Accord, a partnership between federal and state governments. This initiative plans to construct 1 million new homes over 5 years from 2024, utilizing private capital, including funds from superannuation. The government also aims to build 30,000 new social and affordable rental homes through a $10 billion Housing Australia Future Fund. This proposal became law in September after negotiations with the crossbench. In Victoria, former Premier Dan Andrews focused on housing, unveiling a plan to deliver 800,000 homes over the next decade, including social housing for low-income families. In the short term, policymakers can offer financial assistance to first-time buyers and rental support to tenants. In the medium to long term, structural changes to the tax system, planning laws related to development and land release, and easing regulations for banks to lend to home buyers are deemed essential. And with this, we've come to the end of our video. Make sure to like and subscribe to our channel, and don't forget to check out these videos for more of these valuable insights.